All right, what is up, everybody? Welcome to another episode of Real Estate Wholesaling Analysis. My name is Elton. I'll be your host, and for now and forever until we probably reach like 100 episode. This is our 34th episode so far. There's about 40 hours worth of previous episodes as well too. You can head over to eltonvargas.com/education so that we can have access to all those previous live Zoom events. So that way, if there's any questions or anything, you can ask them there. If you have more personal questions, I do happen to do more one-on-ones at my website, eltonvargas.com. With that being said, we're gonna jump right into it. Just a little bit of background about me. I've been wholesaling for like 10 months out of the 11 months that I've been in real estate overall. A little bit more background beyond that, beyond real estate. I have a decade worth of sales experience, and then from there, I've done like multiple types of sales and marketing as well too. So when it comes to combining real estate with sales, it's pretty much the same thing. You're asking questions, you try to negotiate, and you build in relationships. So real estate overall, just it takes it's a process. It does take some time. You just have to definitely take a lot of learning, but make sure you put in that learning into action as well too. And the reason I started this real estate wholesale analysis is because when I first started real estate wholesaling, I used to get stuck as well too, analyzing like some deals. It'll take me 1 hour to just analyze one single property. So it's really been like a progress to enhance my skills over that. So it does take some time, but again, learning and practicing and putting that learning into an action is what's definitely going to help you learn a lot in your real estate journey. But with that being said, the way these series go is more like it's going to be like the following, where we go through a presentation. Usually, the presentation goes really quick, about 10 to 15 minutes, just touching some basic stuff in terms of like real estate analysis. Then we're gonna go through some real life analysis where we go through some properties that I choose, or if there's some properties that get provided by some viewers, that makes it even better as well too. So that way, if they happen to be stuck, we do the live analysis on those specific properties, and then go through like the comps and the entire process. So you'll see that hands-on. Of course, there's going to be a Q&A, and then after the Q&A, if there's no questions or any more questions at all, then we will move over to the breakout room where if you want to stay to like network with other investors, wholesalers, agents, builders, whoever it is that is joining all the this Zoom live meetup, then by all means network with one another as well too. So now let's just get right into the presentation. So start with like real estate wholesaling. Real estate wholesaling does require quite a amount of steps to achieve your deal. It's beyond you probably hear a lot of steps. Well, it's just all you have to do is just get the property in the contract and sell it to a buyer, and that's it. Yeah, that's the easy route, but you do have to take there's a few other things that you have to execute. These are like the full layout of it. But again, this series is mainly about calculating the analysis and then figuring out where your numbers should be at. And that's where we're going to go through repairs and some offers as well too, and how to calculate like your offers. So first things first that we have to understand about analysis, the very first foundation when analyzing a deal is determining what the property's value will be. If it needs any type of repairs, how much that new value will be. So what we like to call it's ARV, or after repair value. And again, the word pretty much says it, what the property's value is after it gets fixed up, depending on what kind of fixing it needs. Next, sometimes we do have to, most of the time we do have to find out if it needs repairs as well too. If it does need repairs, we have to calculate that, which we'll touch that in a few seconds. But when it comes to calculating any further analysis, well, it's really good to know how your buyers are buying a lot of their deals. So essentially, what you want to do is before you start looking for properties, get in touch with buyers in the area. Look for properties that are currently getting fixed up and getting flipped, basically, or just looks like it got like a lot of a job done. And then simple way to find these is whenever you're searching for homes, There's certain keywords they can do is you can type in updated or recently renovated. So there's a few things that is going to be on the description to let you know what kind of home what it was. And if it says updated or recently renovated, or new kitchen, new this, new that, then that's how you know it's going to be a property that is getting fixed and flipped. But essentially, it is good for you to find out how your buyers buy properties, because if you're just going out there just on a limb trying to get property in the contract and then you don't have any buyers yet, you won't know if that buyer is going to be really interested. And it's always good to have multiple buyers in hand rather than just having one, because if you rely on one, then your deal won't really work. So build a buyers list, look for properties that are getting fixed up and flipped. If they're individuals or they're LLC based. Um, you can find all those properties that are getting fixed up. But essentially, the point here is basically find your buyers, find out how they do their calculations, and how do they come up with their offers. And of course, the major part of it is for you to find out and do your due diligence by finding out the ARV on their side. So the next step after you find the ARV is going through like repairs, essentially what the property's type of updates that it needs. We're gonna go through these repairs. Are gonna be light repairs. Are gonna be very easily on properties that are really more rental properties, or properties that have been really taken care of throughout the year that the homeowner has lived in that property. And they're gonna require very light stuff. $10 to $20 per square foot is could be the average price per cost on those repairs. In some areas, that's gonna be a little bit more expensive, like in like states like California, Texas, Washington, Massachusetts, Philadelphia, here and there, Florida. So there's a few cities and states are it's just very expensive in the area. You want to add $10 to $15, I mean, sorry, $15 to $20 per square foot more on these average price per square foot on the repairs. So just keep that in mind if you happen to be on one of those expensive cities or states. Looking into the average repairs is going to be the projects that are going to, these are the type of properties that are going to be more involved in those project types. And these projects are going to involve a little bit more elbow grease. It's going to take some time for it to get fixed up and flipped. 2 months, 3 months, maybe sometimes 4 months, depending on the kind of work that the buyer is doing at the end of the day. But these are going to be taking place. These are kind of repairs are going to be taking place in the major areas like kitchen, flooring, bathrooms. Sometimes it could be the doors, windows. Occasionally, you probably have to do like the roof, if anything, garage door, landscaping. And so it's going to require like a few extra things, and of course, painting as well, to add like a color scheme into the property, make it a little bit unique, or modernize it a little bit. Those are the kind of repairs that we're going to be starting into looking into like the average repairs. Next is going to be more on the gut chip repairs, and these gut chip repairs are going to be on properties that are completely destroyed. They look like they're abandoned. They have a smell bad from mold. They're just deteriorating. So when it comes to looking at these properties, these type of properties are going to be they're going to take a little bit more time, more than probably like 6 months. I would say probably a little bit longer, depending as well too, because sometimes when you come across some of these gut up type of properties, sometimes it's always best to just demolish and kind of start all over again. The only thing that doesn't get demolished is the foundation. The foundation will always stay, depending if it has like a basement or there's no basement. There's going to be some things with that as well too. But these are going to be full on projects where the property either gets demolished or it gets fully stripped down, and you're starting all over again from walls, wiring. Pretty much the whole 100 yards is going to get done in these type of projects, properties. And usually for these type of properties, sometimes there's going to be fires on them as well too, and they're not going to be very expensive. Mainly that I've seen a lot of these are going to be in like Illinois, Indiana, Alabama. There's going to be a lot of Midwest states basically where these properties are going to cost less than $50,000. Anything less than $50,000, those are the properties that are going to be, again, that are going to need some type of demolishment, and or going to need some type of full updated gut job repairs from there. Now, when going back to the ARV, when we're looking for the ARV, how do you find the ARV of a property? Best way is going to be looking, and the simplest way is but looking for similar properties that have gotten that job or that fixed and flipped, and it's either on the market, it's either under contract right now, or it's sold recently in the last couple months. So when we're looking for when we're looking for the ARV, we're basically looking for comps or comparables, similar properties that like ours, but again, properties that are getting fixed and flipped already. But we are going to be setting certain parameters when we're looking for the ARV. And when we're looking for the ARV, the first thing we want to make sure when we're looking for comps is the square footage of the property. So we're going to be looking at plus or minus 300 on the living space for the square footage. Lot size, this is going to be more involved on properties that require like acres. So if it's a quarter of an acre, half, three quarters, 1, 3, 5, 10 acres, then you want to compare acres to acres on those type of properties. But if you happen to be like more like in the urban areas or urban cities, then by all means, there's going to be a lot of land available. Occasionally, you might come across a property that might have two lots. So again, that's where you also have to compare the lot square footage as well too. But again, this is going to be depending on where what kind of the areas that you're looking into. If you're more looking inside in the city or urban, or more in the suburban areas. Um, Next, when we're looking into those comps or looking for similar properties that sold in the area, you want to look within a half mile to a 1 mile radius. You can go a little bit more extensive up to like 2 miles as well too. It's perfectly fine. The only thing is when we start extending the radius of it, you also want to keep in mind of specific areas where there's going to be high traffic roads or major roads that are going to be flooded with traffic. So they're going to be flooded with traffic from commuters, buses. There's going to bus lines, I should say, delivery trucks, semi trucks, construction trucks. So it's going to be a flow of traffic, or just think of it like a highway, basically, where it's just a constant flow of traffic happening in that road. And you are going to be able to see it because if you happen to have like a job that you have to commute to, then you know what these roads look like in your area. So usually that major road is splitting up the neighborhoods. So one side is one neighborhood, and then while the other side is going to be a whole different neighborhood as well too. So just be mindful of keeping a look on those areas as well too. Now looking into the years of the home, where we want to make sure that we compare apples to apples. So you want to compare properties that are within plus or minus 10 years. You don't want to compare a 1960s home to a 2024 brand new built home, because the appraisal of the materials, the laws, or the permits and everything are just very, very different from one another. So it's just different times, things were done very differently. So again, you always want to look for properties that are within the same year of your subject property. Now, going back to looking for comps, you also want to look for updated properties, but it's okay if you find a not so updated properties or properties that have sold in the area that are very ugly, because that's going to tell you two things. Properties that are really fully updated and that got already that full remodel, that's going to be one market. And then properties that are selling at their as is condition without any repairs, that's going to be a whole different market. So you're going to have a perspective of seeing how much those properties that are getting fixed up are going for, and how much of the ones that are not fixed up are going for. So it's really good to find out comps on both sides, so that way you can understand what's actually happening in the neighborhood. And you want to look for properties as well too that are not just the ones that have recently sold, because those are properties that have sold in the past, but you want to look for properties that are currently in the present time. And the ones that are in the present are basically properties that are on the contract right at this exact minute and second, because the properties that are currently on the contract, I gotta let you know, like, hey, there's a lot of properties like going out and they're selling really quick. It's been on the market for like 7 days, 14 days, 30 days. Is letting you know what's actually happening. So the properties that are on the contract are giving you the insight of how responsive that market is. And of course, looking in the properties that are still available, those are properties that are going to be potentially selling in the future. And it's really good to keep an eye on those as well too, because if they're not selling, then it's probably over the price as well too. So again, you want to find the ARV in a mix of all of those time frames and markets as well too. So we're gonna walk through a quick breakdown of what makes like a deal work. Just so you can get a perspective from like the seller, the buyer, and of course yourself, the wholesaler as well too. And what would that look like? And walk through that in a second. Part of the process when we're doing the real estate live analysis on properties that you guys provide, or properties that if there's nobody providing any properties for us to analyze, then I use um, my own spin the wheel and we look for properties in random markets. But I use my own tools at eltonvargas.com, so if slash calculators. So if you want to have access to those calculators and also the CRM, you can definitely have access to them. You just get the pro bundle and you get the best of all the worlds. And of course, we're going to be using some free resources like Redfin, Zillow, PropWire, and Realtor.com to do some analysis as well too. Because I'm not an agent, and because I don't have my real estate license whatsoever, I have to use whatever resources I do have available from there. So with that in mind, let me go through here, and I think you guys should be able to see my screen still. Yes, awesome. So this is going to be the investor's guide really quick, so we can go through like a breakdown of a strategy that a lot of investors use. Some investors do it like this. That's why I was mentioning in the beginning. It's really good for you to find out how your buyers calculate a lot of their deals, because not all buyers are going to calculate their stuff the same way. They're all going to do their own thing because again, they have years and years of experience that they found what best works for them, and that this is one potential route that it gets calculated. But again, like I was mentioning, to help you expedite your process, I have my own calculators. So the calculators you guys are going to see in action to help you and get like a perspective of that as well too. But let's walk through this really quick. So looking at this as this example, when we're looking over here, part of this is going to be the strategy. Is going to be the 70% strategy that we're going to be implementing over here. And let me see what's going on here. All right, cool. So looking into this, this is gonna be like the most common strategy, the 70% strategy that a lot of investors are gonna be doing. But the way we're gonna go through here is we're gonna go through this really quick. So first things first is we gotta find properties. So when we're looking for properties, you wanna look for properties or sellers that are interested in selling. So you come across a property, it's off market, there's no agents involved, and the seller's really motivated on selling their property. So they're interested in selling their property for $764,000. They're really motivated. Maybe they need a downsize, and whatever the reason is, the motivation is like really high. And again, you could be working with them and letting them know. Of course, the next thing is, besides getting like the price of how much the seller actually wants, is understanding the repairs. Looking into repairs on how much does a property potentially need to get updated. And when you get a chance to look at the property, either yourself or you have somebody else check it out. When we're looking at the property, we estimate that the property needs roughly around $80,000 worth of repairs. Okay, so we have the asking price, we have the repairs, the potential repairs, because the repairs are going to be a plus or minus game. It's really up to the buyer at the end of the day on what it is that they want to do. But the buyer, again, they can go higher, more than $80,000 or less. It's really up to them. But those are the first two steps: finding out, get the asking price, or or how much does a seller want to get for the property? How much do they want to walk away with? And again, right now it's just still in the potential side, so we still have to go through it, and of course we still have to negotiate. Additionally, too, we want to find out what the area is. If you don't happen to know like what the ARV is in your area, it is really good for you to find out that off the bat, because if you're coming in clueless, then it's going to be really hard for you to come up with a number, especially if you're like on the spot in front of like this the seller directly. Sometimes you don't really have time to find like the ARV whatsoever, but it's really good for you to understand like your market. If you know nothing about your market, if you're coming in blind, then that deal is definitely gonna that either the homeowner is gonna be stepping all over you, and they're gonna know that you're not really a good person to do business with, because you have like zero knowledge, and you have zero experience, and are clueless about what's happening in that market area whatsoever. So it is really good for you to understand like the market. So if you're jumping into wholesaling, know your market first, then look for buyers so you can understand what buyers are looking for, then start looking for properties. But for this area, let's say we know like the area, and it looks like a lot of properties in this area go for $875,000 based on our subject property. So now we have the asking price, or how much the seller wants to get for the property. We have the potential repairs for it, what it needs some updates, and we also have what the property's ARV is for like this specific area. But then now we have to understand how a buyer is going to be buying this deal. And the way it gets broken down, especially with the 70% strategy, the strategy gets broken down like this. First, we have to subtract both of these, the ARV minus the repairs. We have to subtract these two, and what that's going to do is going to give us this new ARV number, which is 795,000. Part of that 795,000, we multiply the strategy of the 70%. And what the 70% is basically a breakdown of two things. One is going to be the breakdown of profit, how much profit the buyer is going to be making on this deal. Potential profit is not the guaranteed profit just yet. And also closing costs. Yeah, part of the negotiation process is letting the homeowner know that, hey, Mr. Homeowner, we're willing to pay for we buy your property cash, but we're also willing to pay your closing costs additionally too. So that way it's a lot easier for you to transition over to your next property. So we're basically, the offer that we bringing you over the table to you is basically the money that you're walking at the end of the day. It's either going to be a check or a direct deposit that the title company slash escrow is going to be giving over to you. So that's what you're going to be walking away, because we're going to be taking care of all the other fees. Of course, make sure that there's make sure that there's like a property. If the property has a mortgage, that's something you want to keep in mind for as well too, depending on how much it is. Any tax liens, how much tax liens are available, because those are extra things that you can also negotiate from the asking price. So an investor or the end buyer, the most that they're going to be willing to pay for this type of property, they're willing to pay $556,000. So the seller's asking 764, but the investors look into the most that they're willing to spend for it is $556,000. So again, those are going to be two different numbers. But again, if we're touching bases on the motivation, because you're helping the homeowner cross that bridge, you're building that bridge for them and helping cross that bridge for them to transition over to their new lifestyle, and helping with like their goals and what they want to do next. Then again, you're basically touching a lot of base points in terms of like their motivation. And the seller has to be really motivated as well too. And like I was mentioning in the beginning, the seller is really motivated to make this deal happen. So you gotta touch all those key points as well too. Let them know, like, again, we're willing to pay your closing costs. This is gonna be a cash offer, buying your property as is without any repairs. But based on the what we're looking into, like on this area, we can't give you that 764. The most that we can give you is can always give like a range. And of course, make that range a little bit below the investor maximum allowable offer. So that way, again, you have room to negotiate as well too. But then somehow, some way, you continue negotiating, continue communicating with the seller or with the homeowner, and also you happen to negotiate on this deal, and maybe it took like a week, maybe 2 weeks, or a couple of weeks for you to negotiate, and you end up getting the property under contract for $550,000. Then that's what you got the property in the contract. Now, what you're going to be doing is doing the assignment of sale, or assignment of contract of sale, which is basically now you're going to be selling your property, or the assignment of a contract, for a wholesale fee of $20,000, or at the price point of $570,000. So that's what you're going to be advertising to the end buyers. So you can let them know, hey, I'm selling this assignment of contract for $570,000. You have to pay the closing costs. It is going to be a cash offer, and the closing date is on this day, and anything else that you want to let the end buyer know. So then now you have your $20,000 wholesale fee into the deal, but then now we start jumping into the perspective of the buyer in itself, to see like, is this deal really going to work at the asking price, or is it not going to be working at all whatsoever? So then now what we're going to be doing is we're gonna be adding some expenses off the bat. What some of these expenses are gonna be is your contract of assignment. So the $570,000, we're gonna be adding that. We're also going to be adding the closing costs because the property is being sold at $550,000. Your end buyer is going to be paying the homeowner's closing costs and their closing costs. So it's going to be a total of 10%. So that's going to be equal to $55,000. And of course, the $80,000 worth of repairs. So all of those combined is going to add up to a initial investment from the end buyer of $705,000. Of course, that's not all done up front. There's going to be like some earnest money deposit as well too before that. But eventually, all of it combined is going to be a total of $705,000. That's going to be all of it combined. But now let's break it down and what it will look like for the end buyer to resell this. So the end buyer at the 70% strategy, they're going to be listing the property for $875,000, or AKA the agent is. So this homeowner is going to be paying the agent fee. He's going to be paying closing costs again because of selling the property. And then we subtract all those fees from the ARV. Now we have this potential profit of 796. But additionally, the investor invested $705,000 in the beginning. So we have to subtract those two from one another. And what this is going to give us is going to give us the actual profit at the end of the day for the investor. And what the actual profit is going to look like is going to be $91,250. Originally, it was projected to be $159,000 right over here on the top right corner. But if you guys can see, it turned out to be $91,000, which is at 11.48% profits, or a 10.4% margin, or a 12.94% ROI. But again, that's if the property sells at the asking price. The property can definitely sell for more than 875. It can sell less than 875. So real estate is basically a plus or minus game. It's not going to be some guarantees whatsoever, but it's just what makes like the journey really amazing from there. So to help you guys out, that's basically a perspective from an end buyer, from a seller, and from your wholesale side as well too. So hopefully that's able to help you guys understand where a lot of buyers come in. But again, it's really essential for you to find out how your buyers calculate their deals. Moving on to, let me stop sharing that. And then now let's move on to looking at some deals. So let's start analyzing some deals out here. Let's see. Let me pull this up. If there's any questions along the way, you guys can ask your questions along the way. Again, we're gonna have that Q&A afterwards. But let's do a spin the wheel to see if we're able to find some properties in a random market. And what market do we have? Michigan, it's really a small town. So let me look for Fresno, California. All right, California. Let's check it out. Fresno's. All right. So let's look at Fresno there. We're going to be using Redfin as well too. Fresno. All right. Let me reset all the filters, make sure everything looks good. Let me reset all the filters here. I don't know why I'm looking at all the rents. I'm not looking for any rents in Fresno. All right, cool. All right, let's go with Zillow. So let me look for some single family houses. And over here, let's look for, let's show more. I don't want any auctions. I don't want new construction. And I don't want anything coming soon. I want things that are available right now. And I like to look for properties that are at least 1,000 square feet and higher. And let's hide 55 plus communities. Awesome. So I'm looking mainly for the fix and flip because I'm trying to, again, like I was mentioning, if you guys want to have access to the calculators, the Pro Bundle gives you access to the rental one, the ARV one, seller finance calculator, and of course the CRM. This is what the CRM looks like over here. Let's see. So this is the CRM where you can keep up track of all your properties, your comps, all your people, your opportunities if you happen to have something under contract, and of course your markets as well too. If you want to keep a track of all of your markets, I have like a video going through that as well too. So you pretty much keep up a track of everybody and everything. And then these are fictitious properties, so don't try to look for any of these because again, they're fictitious. So then now let's look for, oh, and then we're going to be using the ARV calculator. So this is what the ARV calculator is going to do for us. We're going to be putting in some basic information here, but let's look for a property first. Like I was mentioning, for this, I was looking for, like I was mentioning in the beginning, part of the process is know your markets. Um, so I'm gonna walk you guys through right now how I analyze this market at all because I don't know Fresno, California like that whatsoever. Besides driving through it from a couple times. But other than that, is I gotta look for a market and I gotta look for buyers. Of course, for right now, I'm not looking for any buyers because I'm not trying to be active or trying to do any deals over here. So if you happen to be here in Fresno, California, and I find a deal for you right here in Fresno, California, and you live in Fresno, California, you better take advantage of that opportunity because I don't know who else is doing that out there where they're doing the entire analysis for you and you're not really taking advantage of that whatsoever. All you have to do is look for buyers yourself. That's pretty much it. But what I definitely want to do is market. So first, I want us to understand my market. And what I love about Zillow, a lot of you don't take advantage of Zillow whatsoever. You're not using Zillow to its full potential. So what Zillow does, it gives you a great amount of information and you can find out how much properties are going for, which is basically the ARV. Zillow is giving you the ARV right in front of you, but you're just not looking through it. And the way you find the ARV is simply scroll down all the way down to the bottom, past all of these searches and all this until you reach this section where it starts talking about properties. And let's see, where's that? Where's that? Uh, Fresno. Oh, I see why. Let me restart all over again. Fresno, California, because I was looking at rental properties, so that's what was messing it up. But what I'm gonna do is I start all over again. So I'm gonna scroll down to the bottom section one more time. Apologize, little mishap right there. And then right here where it says explore nearby and average home values nearby Fresno City homes, Zillow is telling me how much homes are going for in all these cities and any other cities in that are neighborhood to Fresno as well too. And all these numbers, this is basically my market analysis. It literally took a few seconds for me to find out, and I'm gonna go back to my CRM and I'm gonna put it right here. And I don't know what county I'm looking into, but right here is I copied all that information, and then right here I'm gonna head over to edit, paste a special, and then type in values, and then paste all of those values in here, and shabam. Uh, Now what this is going to be doing for me, let me copy this because for some reason this got deleted. And what this is going to do for me, this is going to help me find out if I'm a fix and flip investor, I want to buy it at 70% of the property's asking price or property's ARV. Then from here, this is what I'm going to be doing. So again, this is the potential ARV. It's going to be a plus or minus game, so that's why I have to do my due diligence. But if this is my ARV, this is the most that an investor is going to be willing to pay for it. Again, they're all going to be doing things very differently. So this is where I have to find my buyers. But I know for sure there's gonna be a buyer out there that if there's a property selling for 370, the most that they're gonna be willing to pay is $260,000 for a property. So this is basically my ARV on the left side, and then this is the highest offer I'm willing to get on this deal. And the ones that have dashes, just type in 0. Bam, bam, bam. There it is. And right here at the bottom, this is the price that I'm going to be looking for properties. So this is the average between all of them, and then this is the average between the ARV and the average on the most that an investor is willing to pay for it. So then now I'm gonna use this price point. I'm gonna looking for properties that are 200 and I'll go to like $230,000. So I'm gonna set my price point now in Fresno. So I'm gonna be looking for properties $230,000 or less. And let's see what I'm able to find. And then bam, off the bat, I have 6 properties. 6 properties off the bat. So it literally took like less than 2 minutes for me to find out the ARV and less than 2 minutes for me to find out great potential opportunities whatsoever. Because what Zillow again was telling me earlier is on in Fresno homes a lot, and that's why I gotta keep a when I look at the addresses, I gotta keep an eye on the cities, because again, depends on what city I'm looking into. But if they're in Fresno, I know that the most that the properties can go for is $370,000, and that's why I'm gonna looking through all these. So and these are gonna be project properties as well too, because again, they're sitting at the fix and flip asking price. Um, so let's see what's actually happening with this one. Imagine a property needs from TLC requires extensive renovations and repairs. The fixer-upper has the potential to transfer for extensive, like outdated features and structural. So off the bat, this is a great property because it's really outdated. So then what I'm gonna do is let me collect some information. So the asking price is $190,000. So I'm gonna put $190,000. I don't know if there's any debt, so I have to ask the agent because it's listed with an agent. How much there's debt in terms of like mortgage or any tax liens. The square footage is 1430. We are in California, like I was mentioning. So California doesn't have basements, and I was mentioning earlier about the repairs. When you're looking at the repairs, the properties repairs are gonna be right over here. So here in California, it's really expensive. So I have to add $15 to $20 per square foot more than what the average prices were on the presentation. So if we're looking for average repairs, these are gonna be 15 to like sorry, $25 to $40 per square foot. So I'm at $15 to $20 more per square foot on this. California is gonna be a little bit more, so it's gonna be $20 per square foot. But let's look at here. The property is 1430, and there's no picture, so I can't really know what it actually needs, but it does say structural and it requires extensive renovations. So extensive, it can be really close to that, like the top, or maybe even getting close to like gut job repairs. I'm gonna play it safe and go with the gut job repairs. Gut job repairs are between $45 to $60, but I'm gonna start with the low section of a gut job repair, so 45. And again, being California, I'm at $20 more. So in L'Oreal, it's gonna be $65 per square foot on the repairs. So I'm roughly, it's a plus or minus game. Again, at the end of the day, it really comes down to the end buyer. But roughly, this property needs around $93,000 worth of repairs. And I want to make my profit. I want to make at least 20%, because if we saw an example from earlier, it was potentially 20%, but at the end it turned out to be 11.4, 11.5% in terms of like the actual repairs or the actual profit. So I need to start hiring again if there's any other expenses, bam. And off the bat, the potential Fresno homes resell for $370,000. If you guys look at the calculator, if I buy the property at the current asking price, $109,000, I do $93,000 worth of repairs, and I want to make 20% on my deal, I need to resell the property for $362,000. Like I was mentioning earlier, Zillow gives you the information for free. Zillow is telling me the properties in Fresno can resell for $370,000. Bam. But now I need to confirm this information. So what do I have to do? I gotta look for comps. So now let me look for comps on this property. And where is this property sitting? Right over here. Beautiful. So right on this area, awesome. Looks like we might have some major roads. Okay, cool. It looks like Key Canyon Road might be like that major road. But let's look at properties. What's the square footage one more time on this subject property? 1430. So I have to go plus or minus. So my comp should be between 1100, 1130, all the way up to 1730. So I can do 1100, so I'm gonna leave it at 1,000, and the most is going to be 1730, so 1750. Awesome. And what I want to look for is there's no other properties selling in the area. That's because I have a limit, but let me take away the limit and let me see if there's any other properties. The most that they're selling for is let me put a 450. Are there any properties within this asking price? So there's 1130. There's an 1116 freshly painted. Whoa, so this is a great comp off the bat. Because again, I was looking between 1130 all, and this is 1116, so a little bit short of the square footage, but this is a comp that is fully updated, and this property is selling for $305 per square foot, or sorry, $305,000 or $273,000. So then now let me go through my comp section and then start putting in some numbers right here. So 273, that's one potential comp. Let's check out this 239. This 239 has a new roof. Okay. What about this one? 359, 1658. Not really updated. Oh, what I'm missing is this. I forgot to put this. Pending or under contract. Looks like we have this one pending on the contract 225. So far, if this property looks like that and our subject property is selling for $190,000, then this is a great deal so far. That's already what is that, $35,000 less than asking price. And so we're getting so far it's a good deal, especially with the extensive. And then our subject property is 1,400, and this one is under contract right this second, pending for 225, maybe a little bit less. Who knows what it's actually getting sold at exactly, but this is selling. It's almost the same square footage, 3-1 as well too. And then look at the amount of work that it needs, and this is under contract right now. So $190,000, whoever the buyer is and they don't see this, oh man, this is going to be a potential deal as well too. So I don't see anything else. This is the other one. We saw this one, not really fully updated. We have this one. It has an extra bedroom and an extra bathroom, but it is within our square footage, and this is selling for $240,000. So let me put that here, $240,000. And here's the thing, I haven't even looked at properties that have actually sold in the area. This is just properties that are either pending or they're still available at the moment. What about this one? This is for sale. Someone updated. It looks like it's been sitting as well too. But then now let's look for properties that have been selling in the area or have sold actually. And let me remove the asking price, and let's see. So this, and then here's the crazy thing, our subject property is really close to this. But I want to look for properties that have sold in the last 6 months. So let me see what has actually sold in the last 6 months. So we have this 290. Oh, then here, let me look for the highest to low. Where my highest is. Okay, that's a little bit off the side. Uh, that's a $8 million home. That's probably like a package. 357 over there. This sold in March. Okay, this sold in October. Okay, so actually let's go with the newest. So 280. Okay, 190. Look at that. Here we have this one, 285. This one's a little bit too low on the square footage. Just by can tell, like the outside, it definitely needs a good amount of it. But this is estimated close to $279 per square foot. Let's see. So this is it is sold for 285,000 divided by 1024. That puts it at 278. So really close to it's just the square footage is a little bit too low what we're asking, because we're looking for 1130. So anything less than 1130. Oh, we have this one in January. Uh, any description? Anything? Discover captivated renters undergone multi upgrades, transforming. The bathroom kitchen have been tastefully remodeled with new appliance. Okay, cool. So this is one of them right here. This one sold for $302,000 in January. So $302,000 divided by the square footage of 1266. So 240. So 240, another comp. So bam. And there you go. Spot on. And this is our ARV. So literally we're spot on the asking price. So I'm gonna go with even 360. So the property can resell for $360,000. And then this is the most that an investor is willing to pay for this property. So far we have one investor that is playing it very aggressive, willing to pay $160,000. That's cash. Or another investor really close to like the asking price, willing to pay $186,000. So then bam, that and then this is their they're willing to pay the closing costs and they're making roughly around $50,000 to like $60,000 on this deal. So now all I have to do is find a buyer and of course try and negotiate our subject property. It hasn't been on the market for too long either. It's only been listed for um it was only listed for like 5 days. Let me go back to our property for sale. So it's only been listed on the market for 5 days, but that's a great property where I found three comps. And again, the property, if you go back to what the market is for properties in Fresno, they're selling for 370, and our property can sell for $360,000. It took me less than 2 minutes for me to find the ARV and look and find potential deals that are selling less than the asking price of what I needed to be in terms of like average. And right away, even in like less than 5 minutes, I found a property and found comps off the bat. And the property, it's at a great discount because there's another property on the market right now that is under contract for $225,000, $35,000 more. So if and that's somebody that's willing to pay $225,000. If I'm able to get it close to like $160,000 of the asking price, and I resell the property even for like $200,000, that's a $40,000 wholesale fee that you can get out of this deal because you're bringing an amazing deal to a buyer because you have somebody else willing to pay $225,000. Of course, they probably negotiate it, so it'd be really close to like $200,000, but that's still really an amazing deal. You can wait for that deal to close, or you can try to get this proper in the contract off the bat because the numbers are giving us green signals where this is a great deal for you to negotiate and have like a buyer in this area, especially if you get it at a discount. Even if you get it at $160,000, you can resell for even a $30,000 wholesale fee. Resell it for what the seller was actually asking for, $190,000. So this is a deal off the bat for sure. It's an amazing deal that you can jump into, and that took us less than 5 minutes to find this deal, look for the comps, and literally take less than a minute for us to find what the ARV is for like the area that we're looking into. So that's an amazing deal in terms of like Fresno, California wise. And then we can look at the other deals as well too. What's our average price over here? Let me look really quick. Let's see, what was the average price? Our average price is right here. Average price was 230. So what about the other ones? Are there any good deals in terms of the other ones? Let me reset all these filters one more time. Select houses, and then our average price or highest price point is $230,000. And then Fresno, California. So that was one deal. That was the very first one that it's been just on the market for only 5 days. Let's see, what are other good projects over here? Two good ones, both of them at the same, really close to one another. This one has been sitting for 170 days. At least this one doesn't have internal pictures. And the square footage, 1,000 square feet. Okay. Charming downtown, situated at the heart. Okay. Personal offering convenience, access to shopping, dining, and entertainment. My problem is why has it been sitting for that long? I do see that it's a little bit, it's a 2-1. Let me check out if it's been on the market, not on the market, it's been on their contract. And yep, There's the red flag right there. So it's been listed for almost 6 months, 170 days. It's been under contract in the past, and then it looks like it got listed. So something happened over here with this buyer. Most common answer from agents is the buyer fell through or the buyer's finances fell through, and that's the most common excuse. And ever since November, once it got relisted, they haven't done a price drop whatsoever either. So I don't know what they're expecting for this property to really sell for, unless the agent has like strong comps. This is still sitting in Fresno, California. So when I was looking at the potential ARV, again, going back to the Fresno properties can sell for $370,000. And the first property we just analyzed, it can resell for 360. So really spot on. And with this property sitting in downtown, he can probably resell for that $370,000. But what's our job as a wholesaler is we have to do our due diligence and want to make sure that it actually makes sense. So let's dive into this one and let's see what's actually happening over here. So first things first, let me look for any let me remove coming soon. Let me look for properties that are pending in the area. Let me see if there's anything else that is pending. I think this is pending. So this is pending 175,000, 1040. It's only been listed for 20 days. So this one looks uglier and looks like it needs more of an update, but this one, so it's selling faster than the other one. So it could probably be a downtown issue because this looks like it's a little bit outside of that Jefferson area. I don't know Fresno like that, so I don't really know what's going on here. Um, but then you have this other one too, and then this one I think, oh, this one's really fresh. Great fencing off the bat. Great fence, no windows. This is like full gut up repair, but it is under $850,000. I mean, 850 square footage. I don't think I set that parameter. So let me look for properties that are at least 1,000. Oh, but I'm looking for comps, so never mind. Um, Anything less than 750. But yeah, this one, 175. I'm not sure how much they have it in the contract or what's actually going to be selling. All I know, it's definitely negotiable, especially with the subject property that I'm looking at right now. It's definitely negotiable. But I gotta look for comps. I don't see anything selling close to like 300 thousand dollars. That's not either. So let me just dive into properties that are actually sold in the area and let me see what I'm able to get. So let me remove some filters like in terms of like the most properties can sell for. And then let me look for properties. So our subject property was 1040. So definitely 750. And I don't have 1300 here in Zillow, so I guess I'll go with 1250 for right now. And let me look for properties I have sold in the last 6 months. So I'm looking for something close to what our market was telling us, 360 to like 370. And I don't see that happening in this area whatsoever. Let's check out this. This sold in January of this year. By the looks of it, looks like it's rather updated. But let me look and see if there's a description. A home remodeled approximately 5 years ago. Okay. So a remodel 5 years ago. That's not bad. But they're really close to one another in terms of like of the asking price. Then you have this other one selling for like 260. So I'm seeing that our ARV is really gonna be more 260, not 360. Sold prior to publication. Uh, okay, that one doesn't look too updated. What about this one? Also December. Why is there no pictures on this one? That's what I hate about Zillow. This will have to use realtor.com because realtor.com keeps a lot of the listings pictures a little bit longer for whatever reason. But let's check this out. Let's see if it gives us, yep, here we go. Okay, no grass. And it's updated comparable to our subject property, cabinets, flooring, paint, walls, windows, bathroom. So tile bathroom, nothing too crazy. I think this is like a rental property. You don't have a lot of room in that toilet. Um, okay, okay. Uh, AC, definitely need AC here in Fresno, there in Fresno, California. So this is another comp, but again, selling for 235, or what's the price per square foot on this? 235, 234, sorry, divided by the square footage of 984, so 237 per square foot. Um, so our subject property was selling for $175,000. The square footage was 1040. Repairs. There wasn't a lot of pictures, but hold on, let me pull these comps. Comps is 238, that first one. And then let me look at this 265 that sold in January. 265 divided by the square footage of 1246. 1246 divided by, oh, I can't do simple math right now. 1246. So 212. So 212. And then 212, 238 divided by 2. So 225. I'm gonna go with like the middle option. See if you can find something. So yeah, 230. It's what we can resell this subject property to. So honestly, oh, let me go back to the our subject property. That's what's happening in the neighborhood, especially I can't go really far because we're in downtown, so I can't go across the freeway here. All these are selling really cheap as well too. We have this 240, 800 square foot home, 107,000. Whoa, 107,000? Okay. At least I know if my offer comes really low, then it's not going to be an offense to the homeowner because that's a $107,000 property that sold in February. But let me go back to my subject property really quick. And 175, 1044. And there wasn't a lot of pictures internally whatsoever, so that sucks. So I have to go based on the charming in the heart of downtown. Great, that's not really giving me anything, agent. So 1044, I'm gonna say it's gonna be kind of, again, it's California, so California's expensive, so 25 to $40 per square foot on the repairs. But California prices, I have to add $20 more on the price per square foot. So yeah, definitely 62, $65,000 worth of repairs. I need to resell it for 306, but that's not the case. The most I'm seeing that I can get sold for is 235. So a fix and flip investor, somebody who's very aggressive, will want to sell this property for 100, will want to buy this property for $102,000 or all the way up to like $120,000. And again, that last property that I found for 107, again, that's my offer of 101, or from an investor looking for this deal, 101 should not be on the fence because there's another property that sold really close to that whatsoever. So that'll be my price point, which is going to be a 40%, a 30 to like 40% discount from the current asking price on this deal at $175,000. And the cool thing is with this one, it's definitely negotiable for two reasons. How long it's been sitting on the market, because another property got beat before this one, and that it's just a few blocks over, right over here, that is pending and it's under contract right now. Oh, there's this $300,000. Oh, but you see, this is a 3-bedroom, 2-bath. This is pending. Great job internally, floors, walls, lighting, windows, kitchen, bathroom, pretty much everything that needs to get done. I can see the kitchen right here, cabinets, faucet. They didn't take a lot of pictures. I don't know for what reason. 11,000 square foot home, but this is a 3-bedroom, 2-bath. So our subject property is only 2-bedroom, 1-bath. So it's going to need an extra bedroom, an extra bedroom, an extra bathroom for it to get to sell for that $300,000 price point. But again, those are extra repairs that it needs. And then there's other ones for $175,000 that got on the contract before this one for whatever reason. and this has been on the market for only 20 days. So first reason, the price is negotiable, how long it's been sitting, and another property got beat this property for it beforehand. The property needs an extra bedroom, an extra bathroom, so more in the repairs than the $65,000 needed, unless you have somebody that can get away with that 65 by adding an extra bedroom, an extra bathroom, which is not really challenging at all whatsoever. It's just splitting up the rooms from it. And additionally, too, the property has been under contract in the past, and they haven't done a price adjustment. It's been like, what is that, 5 months? Almost three, four, almost 5 months at the end of March since, and they haven't done a price adjustment whatsoever. So I don't know what the seller's thinking. Maybe the seller's firm on the price and they have zero motivation, or they're just having trouble. The agent's having trouble selling this property whatsoever, which looks like there's two agents. Most likely the top agent, because usually the first one probably had trouble selling it, and then the second one at the top is just now taking over it. Usually that happens a lot with real estate agents. Um, so that's the case with this one. So this is a great deal. It's definitely negotiable, but it's all about finding out what exactly it needs internally. And depending on the investor, you can add more to it or sell it for that $235,000 price point. But if you add that extra bedroom and extra bathroom, then you can get really close to that $300,000 price point. So those are two properties. Fresno, California. Again, California being expensive, go higher than the price per square foot of the average repairs that we were mentioning earlier. These are the average price per square foot nationwide. But California is very expensive, so add $15 to $20 more per square foot on those repairs. So that way you're able to make more reasonable numbers on the repair costs. But again, at the end of the day, it really comes down to the buyer on what he or she wants to do in terms of it. But those are two great examples, two great opportunities right there in Fresno, California that we just did. But if you have any questions, I'm gonna do let's do the Q&A really quick. If you happen to have like any questions in terms of like fixing and flipping or analysis or anything that we just walked through on those two deals. And if there's no other questions, it's perfectly fine. I'm gonna leave it open for the break room so that way you guys can network with one another. I don't know if there's any other investors in here, wholesalers, contractors, whatever it is. But I'm gonna leave you guys. You guys are allowed to unmute yourselves if you happen to have like any questions in terms of like the analysis or anything in terms of like related to like real estate whatsoever. Or you can drop the questions in the chat by any chance. No questions. Remember this, the meetups do get recorded, so you guys are able to rewatch them again at eltonvargas.com/education. So if you happen to miss the meetup, it's perfectly fine. Don't worry about it. But if not, then again, you're able to rewatch that all over again if there's no questions at the moment. If there are no questions, then I am going to be opening the breakout room, so that way you guys are able to again network with one another. And then if you have any questions, you're always able to reach out to me on Meetup if this is like your first time coming at Meetup. And then the next event is going to be on Wednesday at this one's going to be a little bit later. It's going to be on Wednesday at 7 p.m. Pacific Standard Time. So 1 hour later than our usual time frame. But that's happening this coming Wednesday. And again, if you want to have access to the calculators, the CRM, and additionally any other questions, just reach out to me on meetup.com. But I'm gonna stop the recording now, and